All right, so it's late at night. It's about 9:30, January 16th, and I figured that I'd teach you a little bit about how banks price out your interest rate. Everyone's very focused on getting the best interest rate, which we get, but sometimes your loan doesn't fit every requirement to get the best interest rate. So let's go ahead and look at how banks price your loan out. So this is a hypothetical example here. $400,000 purchase price with a loan amount of $386,000, which is a 96.5% loan to value. Our target price is 100. That means that our 1% commission is included in that. And this is for a 30-year fixed rate FHA loan. We're then going to move over and hit next. Next, we're going to type in your first and last name, so the mortgage quarterback. Then we're going to fill in this field right here. This is what people don't know. So you have to put credit score, liquid assets, retirement accounts, annual income, monthly debt, whether you've ever been late on a mortgage, and if the borrower can demonstrate a 12-month mortgage or rental history, and then whether or not you're a first-time home buyer. It also recommends if you have gift funds used as a down payment or closing costs, or if you're getting a seller concession. We then have to fill in what your property type is, what property use, whether it's a primary residence, second home, or investment property, and then the state, specifically the zip code, to make sure you meet the county loan limits. Also, real estate owned is very useful to see if you do have landlord experience. And then we go ahead and we price this loan out. Now you'll see right here it says Caliber. This means that right now, today, based on your credentials, Caliber gives us the best pricing for your loan on a 30-day lock. So we offer 15, 30, 45, 60, and 75-day loan locks. As you can see down here, here are secondary investors: Franklin American, Freedom, Correspondent, Pacific Union, and Chase. So as of today, Chase is the 5th lender in the marketplace to purchase your loan once we close it. Now let's get into rate and pricing. So right now, today, if you wanted to get a lender credit, which means we give you money towards your closing costs of $127, your rate is 4.125% for a 30-year fixed FHA rate. That includes 1% commission being paid to the loan officer. That is about the going rate for loan officer compensation. Now let's say you wanted to get a 3.875% rate. You would be able to pay $3,049 as bona fide points, which is prepaid interest, to get a 3.875 rate. In order to get a 3.75 rate, you could pay a fee of $4,794, which is a one-time fee. Now notice, from 3.75 is $1,788 a month principal and interest, to 4.125 is $1,871 per month principal and interest, which totals a monthly savings of $83 per month. So to pay an extra, call it $4,900, a little bit more than that, to save $90 a month or whatever, $83 a month in interest, it would only make sense if you were going to keep this property for at least 5 years. So we run what's called a break-even analysis. Guys, remember, interest rate is important, but service and getting your loan closed is actually more important. So look for a lender that's able to give you those full levels of service, lock in your interest rate, hopefully with no fees, and contact us today. So remember, at Residential Home Funding, we put the fun in funding.